Let's turn to property. And property markets are shifting, but finding the next growth areas remains a challenge. Let's catch up with Chris Christofi, Chief Executive of Reventon. Chris, welcome to Ausbiz. Great to have you on the show. Now, you only have to look at the headlines out there, dominated in the press every day, it would seem, of the dire state of the property market, given we've seen those valuations fall in recent months. Is this uniform over the nation, or are we seeing an uneven spread, if you like?
Well, look, I think with all media, what you tend to see is the negative parts of the media. A lot of people are worried about headlines, but there's so many things that underpin real estate. It's not just one or two. Supply and demand, infrastructure, affordable. We've got a crisis in affordable housing. All these things underpin real estate. So although some areas of the market have taken a big hit, predominantly the $2 to the $9 million mark, affordable real estate, which is what I specialize in, is still growing, and it still has very high demand because so many people need to rent that property. They need to start investing for their future, and there's so many other factors that determine a good investment. So I think it's very, very important that when you start researching and looking at data, that you look at every aspect of it, because you're going to get a different view.
Well, and obviously you've still got that gross imbalance between supply and demand, to your point then, I guess, particularly at the lower end of the market. Overall then, what you talk about perhaps the next stage of the property cycle, what does that look like?
Well, look, I always talk a lot about this when I talk in seminars and that. It's very, very important to look at the property clock and look at an emerging market. And what are the signs of an emerging market? And usually that's infrastructure, that's affordability. So we've been picking great locations since I've been in this game for 26 years and been running Reventon for 21 years. And we've outperformed the market because we're looking at the data. We're looking at the analytics of where to buy, what to buy. And it's very, very important you also take a nationwide view, because a lot of agents or a lot of people only look at one state because they're familiar with it, they're comfortable with it. But when you're looking at real estate, it's very, very important to look nationwide, because there's different states that are peaking at different times. So if you look at the property clock and the property cycle in the real estate that I've been selling, since 2012, we went from regional Victoria, Southeast Queensland, Adelaide, Perth, Tasmania, and every 2-3 years, we're looking at that new area that's going to grow, that's showing all those forward indicators. If you're talking about an area that's growing, you'll probably lost that peak where it's going to really grow in the first few years and do the heavy lifting.
So, Chris, where are you seeing that opportunity right now?
Well, now we're putting a lot of our investors into Perth, but we're looking at our next growth area as well, because I like to stick in that sweet spot, $550,000 to $800,000. Now, what that does is it allows a very high rental yield, and if it's new build, now obviously legislation is changing, so information's only as good as the current date. That's why it's very, very important that you have a good team that's informed, that has a proven track record, so they can make sure to give you the up-to-date information, because strategies change. And what I do say to all of our investors is the most important thing is to take action, because people that are sitting on the sidelines, two things that are very constant and will never change. We're getting older, we're still going to be paying tax, which means we're going to have a retirement shortfall. So for me, my biggest fear is investors sitting on the fence, waiting, rates might go up a bit more. Is the property market going to go low? I think when you take a long-term view on investing, you're always going to be safe. And when I tell our clients the real estate that we sell is recession-proof, they say, how do you say that, Chris? I go, because it's affordable, it's in great areas, and it offers maximum tax savings if you're purchasing a new build. So I refer it as the Zara of real estate. The Zara clothing everyone needs, so it's always popular, always has a demand. So the sweet spot that we're selling always has a demand. So when people come to us with $1.5 or $2 million borrowing capacity, we most likely will show them 2 or 3 properties in different locations around the country, because we're trying to catch that property clock at 9 o'clock so we can get the peak of the market, so we don't get into the peak and we can get the growth of that property.
So, Chris, given the tax changes, have you then seen a substantial shift out of investing in established property into those new builds?
100%. Now, for me, we're very, very fortunate, because at Reventon, we sell new builds. We also have a buyers and vendor advocacy arm, and we sell second-hand properties. So for me, I was very well positioned to take advantage of any way it would go. But for the investors that are really, really nervous, I will say to them, please make sure you get advice. Go to people that have been playing in that space for a long time, that have proven track records, because, you know, we've all heard the saying, you know, paralysis by analysis, so much information, all this negative media, and people are waiting for the dust to settle. But it's a very, very common adage, you know, when people are fearful, be greedy. When people are greedy, be fearful. So now's the time you will get good opportunities. So when you're seeing the clearance rates are not so high, you'll tend to see you'll get better negotiation deals, better terms. So now smart money is moving. Now people are active. And I beg people to make sure that they still take action and not sit on the fence, because 1 year turns into 2 years, turns into 3 years, and then you've got a bigger shortfall in retirement. So it's still important to take action and start planning for your financial future.
Chris, you spoke earlier there. You've taken advantage of those opportunities you've seen, particularly in the Perth market. Where are you looking for those next opportunities then? What are the specific markets you've got an eye on?
There's a few markets that we're looking at the moment, but I usually do about 1 year worth of research before I release that, because when I find the market that we're looking for, and I just mentioned the last 5 that we picked, all outperform the market over 3-4x to 1, then I've got to go up there and research the builders, see how strong they are financially, see how long their building terms are. So before we release any areas, now we're very close to deciding on a few at the moment. Before we release areas, I need to make sure that all my due diligence is done, because I follow a 3-stage process, which is why I feel we've been very successful in our field. Number 1, I have a very strict criteria for it to be a Reventon approved property. Number 2, we do a lot of independent research. Independent research is going to tell us things like infrastructure, schools, shopping centers, jobs, migration, what are happening in the area, which will confirm and solidify what we were thinking. And the third check and balance, which I think is the most important, would I personally invest there? Would I put my family, friends, and team? So do we put our money where our mouth is? So only if it ticks all 3 boxes, and I do the research on the builder, I do all my due diligence, will I be confident to offer a next area to our clients. But we are very close. We are still putting a lot of our clients in Perth. Some are going in Tassie as well. But we're probably about anywhere from 2 to 3 months away from picking that next area. But we also do have a buyer's advocacy arm, which locates the property opportunities across the country as well.
Yeah, you're talking about doing due diligence, your research there, particularly as far as builders. Chris, as we all know, builders, developers, many have gone bust. What do you need to look for? What are those potential risks?
Strong financials, proven track record. Now, you mentioned a very, very good point. You had some of the strongest ones, very well known, which I don't like to mention names on online, go down. And so it can happen to anyone, but all we can do is put as many checks and balances in place, look at their financials, look if their payments have all been on time, look at their builds, look at if they're completing their builds on time. Because usually what happens is before a builder goes bust, there's usually signs. Now they're cutting corners when they're completing the project, they're not putting the same fixtures, fittings, or they're not putting the same care. So there's usually signs. So in all my years of doing this, we've got 12,000 clients. We've sold 3,700 properties. We have dealt with a couple builders, and we maybe had about 15, 20 of those sales the builders went under, but we were fortunate that we were able to appoint a new builder, or half of them were at land stage, and then we could find another builder. So we've gone through that process many, many times, and I always follow, whenever this happens, I follow very keenly, because that could happen to any investor, that could happen to any company. So all you can do is the best due diligence possible and make sure you're there for your clients.